Hey, good morning, everybody. Hope you're doing well today. It's Brian. I'm back for the futures market update. It's Tuesday, the 17th of November, and we're just going to run through it real quickly, see what's going on, and get some trade ideas out there for the day. So let's pop over here. Well, I guess first things first, there is some news coming up. I should share this with you. A little bit later today, we have Mr. Powell speaking. So right now, over the next couple of hours, there's not a whole lot going on, but we do have Mr. Powell speaking over here. It's not anything major, but typically, if there is any Q&A, that's where things can get funky. But ultimately, you know, we've got clear sailing for the first few hours of this morning, where there's no news coming up that would impact us or cause us to be out of the market. Let's go to this screen over here. Here we go. All right, so what are we looking at? Well, our 4-hour bias on the S&P over here on the left side, 4-hour bias is long, 30-minute bias is still long as well. We're seeing, you know, right here, testing, retesting 3,600 as a support level. So, you know, a lot of tests and retests here of 3,600. If 3,600 holds up, you know, we're continuing to look for long trading opportunities. Both of these are long, 30 minutes long, 4 hours long. We're looking for long trading opportunities. So that means we'll be watching for price to pull back a little bit and then break back in the direction of the market bias by breaking out of the top of a previously closed candle, which would allow us to get into a trade. I will say this, if we pull back, and especially if we get down around 35.80, break below that, I'm going to stop looking for the day. And really, ultimately, if we get down around 35.80, more than likely our moving averages would have crossed as well, giving us a conflicting bias and telling us to stay away from the market. But you know, right now, we are still looking for long trading opportunities, especially off of this 3,600. Seems to be a big level of support for us. And you know, if we can stay above that, then I think we'll be fine watching for that continued move to the longer side here. But I will say, caution it, you know, if we do roll over and we break down, and especially if we break down here below this 35.80 area, I'm not even going to look. I'll just let the market do what it needs to do and come back another day. All right. Yesterday, for example, BTX method kept us away from the market. You know, we were looking for pullbacks, wanted to see lower highs, lower lows, and then break back above. During the times that we're trading, during the session times that I have active, never got back up there. Late in the day, it did. So for those that trade later, possibly there was some opportunity there, but for me, it never got into it, kept us away from the market. Same with crude yesterday. You know, crude, we are still looking at a long market bias technically. 4 hours long, 30-minute is long here as well. So we'd be looking for long trading opportunities. What that looks like, again, want to see the market make lower highs and lower lows, and then play a breakout of a previously closed lower high. If it doesn't break, then you know the signal's invalid and we move on. Like here yesterday, for example, lower high, lower low, we're pulled back, we're looking for long trading opportunities. We pulled back, didn't break back out on the next candle, so we wait. You know, here we saw again lower high, lower low, didn't break back out on the next candle, so we just stayed away from the market. I said this earlier during the Forex session, I'll say it again now. It's super, super, super important to be able to not get too antsy. Don't go out scanning the market looking for trades. Find, you know, the couple of instruments you want to trade, set things up, and trade those. You don't need to be in a trade every day. The more you can just breathe and relax and take a breath, the better off you're going to be in the long run. You know, let the market come to you. Don't go out searching, hunting, looking for trades. Because really, and I know it seems counterintuitive, but the less you trade, the more patient you are, and the less you trade, the better off you're going to be in the long run. A lot of the problems we see with traders, you know, create or not accounts, comes from over trading. They go out looking for a trade. And I always kind of liken it to looking for trouble, right? If you go out looking for trouble, you're going to find trouble. If you go out looking for a trade, you're going to find a trade. That's the thing with this market. You know, any moment of any time of the day in any instrument, you can find a reason. If you really want to press the button and get into something, you can find some way to justify what you're doing. Better off to have a plan and then execute that plan consistently in just a couple of instruments. And if you don't have a setup, you don't have a setup. Okay, you can't force it. You can't force the fish to bite. You can't force the trade to happen. I mean, you can, but realistically, in your best interest, you can't force the trade to do what you want it to do. It's going to do. The market's going to be what the market is, and we need to be able to accept that and work within those confines, right? All right. So anyway, going way off topic here. Oil. We're looking for, same thing, lower highs, lower lows, and then a breakout back in the direction of that previously closed lower high. Now, we are hanging around here, we're coming down towards 40.50, which is a big support level for us at 40.50. Break down below that, again, kind of like with the S&P, if we break down below some key areas, I'm not even going to watch. I'll just say, hey, we're below that, and we'll just let it go and move on for the day, come back at another time. And I really think at that point, if we break down, we close down below 40.50, more than likely our moving average will have crossed as well, which would give us a conflicting bias. And that would not, if we have a conflicting bias, the indicator's not going to give us any signals anyway, right? Gold, what's happening with gold? We've got a short bias on the 4-hour, we've got a long bias on the 30-minute. So gold is mixed again, so that one's off as well. So long bias on the S&P for now, long bias on crude. Look for long trading opportunities unless those things that I just mentioned happen. The big thing is if we keep pushing down, the moving averages are going to cross on the 30-minute, and we ultimately, at that point, we wouldn't have a tradable opportunity anyway. So it really comes back to just sticking to the plan. Let things go as they go. If we have that confirmed bias, if things stay long, the biases stay on that confirmed long direction, we'll keep looking for long trading opportunities. If they don't, then we sit it out. All right. So there's where we are for crude and S&P. Again, gold, we're on the sidelines, and we may be on the sidelines for these two as well. We need to see what happens. But the big decision point for the S&P is going to be around this 3,600 level. So we'll see what happens as we get under live conditions in 30 minutes. So, all right. So that's it for me for now. Went a little longer than I wanted to, but yeah, there's your quick bite, your quick